Good afternoon and welcome everyone to the Trading Talk, the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. As I said, this is a live questions and answers webinar, so guys, feel free, regardless of the topic that I'm teaching, if you've got any questions along the way, feel free to use the question section to let me know. Okay, so as we said in the beginning, the first part will be going through the questions we see here. So the first question we have here is, how often should I modify my strategy? Okay, first of all, let's understand what does that mean, and we're also going to have a place for our notes. Okay, and as we can see, I'm just going to also say that the webinar that I'm at the interface I'm using currently is called the Web Trader. The Web Trader, and you can easily have access to it just by logging in with your email and password to the website. And then you're supposed to see approximately this interface. Sometimes it may look like this, but as you can see, it's very easy to adjust it this way by clicking on the arrows at the upper right, and then we can fall down the chart and see the lists at the top. And there is another webinar that we're doing to get a bit more familiar with the menus to the left. Okay, so the question here is asking how often should I modify my strategy? First of all, let's understand why is it necessary to even modify the strategy. Okay, and let's also break down the simple idea of what a strategy is. Okay, so we're gonna write here what is a strategy, and we're also gonna add here another question, similar question. What is a trading plan? Okay, so there are two similar things, and basically the way that it can work together, we're going to look at it in a moment. And also we will understand why do we need to modify any of them. Well, strategy, as we all know, is, first of all, let's begin with a plan. A trading plan will be certain goals and time frames that help us keep track on our progress. Example, let's say $1,000 monthly target. Okay, so based on that, I can make a strategy. So the strategy will be how many positions will be necessary to get to that. And okay, so we'll speak a little bit, we'll also explain about what strategy is, and then we will combine. So a strategy will define how the plan can be achieved, okay, with what needs to happen, what we think that can happen, that will help us to get to the plan. So basically, a strategy will define how the plan can be achieved. Okay, so basically, let's open up one of the instruments just so we can have some practical, useful examples. Maybe we'll use platinum, and we're clicking on it doesn't really, let me show you how easily you can select an instrument. So one of the ways is, let's extend by clicking on the arrows here. And one of the ways is just to erase whatever is here at the top left, and writing down PLA is enough to bring up platinum. Then we're going to click and we have it on. As we can see, platinum in the past month and a half is quite bullish, is very bullish. And all the bulls that we see are with a tail at the top, which means that it could get higher, but momentum haven't proceeded. Let me just click on 1 day, and then we can see the bullish bearish trend that we see here. So it was bullish for a week, then it dropped, bullish, dropped, bullish, dropped. and that's still for the long run quite confirming that this is still for the long run. It seems like a bullish trend, even though there are few times that it flinched down a little bit, but the correction was full and even a bit more. So we're going to stick with the weekly candles and we saw, and if we focus on a question about modifying a strategy, and we will better understand why is necessary and basically how often we should do it. So one of the reasons for me to want to modify a strategy or a plan is basically improvements, right? If, for instance, my goal is $1,000 a month, and I have in my sheets, let's suppose that instead of 1,000 that I'm supposed to get every month, I'm getting 900. Okay, so the monthly target is 1,000, but the actual result is 900. Okay, so what can I do in this case? I can go back to the history by clicking on here, and then I can define at what range I would like to look at, and then I can review the positions that I had, and with that in mind, I can see where I can improve my strategy. This could be various things. This could be the number of positions that I'm taking. This could be the duration of the positions that I'm holding. Maybe I'm holding too long or too closing too fast. This could also be something that with the margin that I'm using. Maybe I'm using too much, or I could use more to maybe get better results. So all of those things. Oh, something just turned off. I hope that the screen that everything still works well. Let's see. Okay, so all of the things that we said, all of the things, what can be improved during modifications. Okay, so there are few things that as we said. So this could be example number of positions taken, duration, holding the positions, better, let's say more efficiency with pending orders, and also margin usage comparison, which could help us again know a bit better how much margin we really need per position and how much we're really using per position, that allows the rest of the margin to defibrillate the account, to keep the position open. And there are other webinars that explain a bit more into depth how the margin works. But on a nutshell, as we can see here, there is a factor here called margin impact, and this is basically the necessary amount we need to open a position. So along the way, if I set a target of 1,000, and then after a quarter, which this is by the way, I think would be a reasonable time to do a research if a strategy works or not. Because if I try a strategy, I try it for a week, maybe even 2 weeks. Does this mean that a strategy is good or not? Not necessarily, right? What about a month? Maybe. What about a year? Okay, but this might be too long. So I need to look back and basically understand what is a reasonable time for me to modify the strategy. And obviously, if it goes well, if I set 1,000 and I'm making 900, I might as well not even change anything. Okay, that depends on the available time that I have and how far away I'm from the goal, right? Of course, if it's a drastic, let's say, again, we're just using examples here. If I set 1,000 as my monthly goal and I'm taking a certain number of positions to get there, and I've noticed that I'm only making 500, which is half of what I set, then I will probably modify my strategy a bit more seriously. Okay, but that depends on the performances, and again, that depends on my available time. I don't think it's necessary to modify the strategy every day, not even every week, not even every month, but depending on the performances and your available time and your trading experience, then you can judge whether to modify or not. Those are the reasons that I think we can think about when we're modifying a plan. So this is something I would like to write down as our answer, and maybe also I'll write it at the top. So how often, depending on how good we are performing based on the goals that we set, we can then judge what kind of modifications can be applied. And again, I don't want to specify and write, a specific time frame, a week, a month, 3 months, because this is quite dynamic and quite dependable. But I think we can have this bit here, and then it would make sense. So those are, maybe we'll have the top row as well. This way it would make sense in relation to what's written underneath. Okay, so what's improved? Okay, great. Yeah, and that makes sense. Of course, as I said in the beginning, if there are any questions about anything that I said so far, feel free to fire away. I think there is a little too big. We're gonna make it smaller like this, and it's still occupying the whole slide. Well, maybe we'll delete this bit because we understand that those are examples, right? Okay. Why is it complaining? There we go. All right. There are lots of things written here, and I have a feeling that we're not going to have enough space for the other questions, so I'm just narrowing it down. And as I said in the beginning, the webinar is recorded, guys, so even if this doesn't make sense when you're looking at the presentation, you can always watch the webinar again on our YouTube channel. The second question here, is it necessary to analyze after the position is opened? Okay, well, this is very similar to what we just saw. If at the moment let's suppose that we are in a buy, and actually let's suppose that we think that this will reverse, and then we're going to draw here 2 rectangle, 1 red and 1 green. So if we are with a sell, our intention is that the value will decrease. Therefore, the farther down it will get, the more profits we'll make, and God forbid if it goes up, then we'll have losses. Now, in this scenario here, basically there are 2 ways, 2 type of trading styles that I'm going to focus explaining the answer for this question. Manual approach and using pending orders. Okay, so this is not the same correlation as we do to copy trading or automated trading or anything like that. This is automating our trading using pending orders versus not using pending orders. So what we're going to do is we're going to look at the value we have at a moment, and we will imagine as if I think there is this bit here that might confuse us. So we'll quickly clean that up. And now we have a green rectangle at the bottom and a red rectangle at the top. Okay. But it doesn't want to move. Oh, there we go. Okay. And here we are. Okay. Now, if for instance we took a sell and at the moment we'll have 0.1, our entry hypothetically will be here. And even though I'm enabling both take profit and stop loss, we're also going to have a scenario as if we wouldn't use them. So what I'm going to do is I'm going to target $100 down like that. And we will also target $100 up like this. And now when we're looking at the result, we can see possible profit 1,000, possible loss 1,000. Okay, great. Well, if I have done certain analysis in this case, and I am pretty sure that the pending orders that I've placed are well composed, this way I don't have to, of course I can analyze the market after the position is opened, but what the situation we have now means is that execute when price hits allows us to automate the entry. So if it reaches that price, it will launch the position automatically. What take profit allows us to do is to close the position automatically with the profit. Once again, when the position is opened automatically, it can also be closed automatically. And the stop loss allows us to stop the position automatically with a loss. I know that I said the word automatically many times, and I will keep saying it in order to convey the message here. In this case, everything will happen automatically, and then I don't have to analyze further after I've opened the position if I'm happy with the way that it's composed. From the other end, if I'm not using any of the pending orders in here, we can still look at the scenario to help us simulate what could have happened. So if we don't have the stop loss and it goes $100 up and it gets to that level, we're going to lose potentially $1,000. We're not going to lose that off the account, but it will be deducted from the equity. Now, it's important to also understand that the level of margin we have on the account is imperative to pay attention to. The reason is, as you can see, and I've explained at the beginning of the webinar, the margin impact is the necessary amount for us to open a position. But because we've got here leverage, we'll break it down in a moment. And then we'll understand how it's related to the question. Because the question here, is it necessary to analyze? Well, let's see, let's break down two scenarios when we do analyze and when we don't analyze. As we can see, platinum, the last time that it's been this high, let's quickly switch to months, and we can see, the last time that it's been at this level was a long time ago, and this was 2021. This was 4 years ago. 4 years ago, and since then, this is the first time platinum not only broke the resistance, but set a universal worldwide all-time high. That means that at the moment, we're looking at a level that has no previous comparison in terms of averages. So we can assume that if there is nothing fundamental in the economy that will prevent platinum from keep going up, it can carry on higher and higher. And if we'll make a comparison quickly with what's happening with gold, and we'll compare also the monthly ratio and also the progression that we see that gold is miraculously, just a second, this is no way that this is months, we'll switch to months, and okay, this is this is gold. We're looking at gold now. To the right and to the left, we've got platinum. So this is quite miraculous. You have to agree with me. This is where gold has been 6 years ago. This is where it's at right now. If I'll zoom out from platinum, we see similarity maybe in the last bit, but no way in progression if we compare it with gold in terms of percentages. Okay, we can look at the lowest level. Based on that, we can see what happened and what happened with gold as well. So with this in mind, if I want to use pending orders and I'm just going to let it float, okay, I might, as we can see with the levels that we have here, this is what's going to happen if it goes $100 against me. This is what will happen if it goes $400 against me. So we'll add another 400. So this will be 1790, and this what would happen. Now this is nearly half of my account, and let's just quickly compare how long it took platinum to move those 400 in the past few months. Okay, so this is where we are, and if I'll put a line at the 1000, we can see that it was less. It was this is last month, this is 2 months ago, so it took it 2 months. So if, God forbid, I open the sell and I don't pay attention and the position is opened, and it goes up like that, so this will be this can be a very serious problem for me. And the 1800 line is right here. So if it keeps with the same progression and it goes with the same momentum that it had last month, it doesn't look too great. So the answer for this question is very, very simple. Of course, it's expected that I will do at least simple analysis to know where the market is at, especially if there is something fundamental that I'm expecting during the time that I'm holding this position. Because as we can see, platinum moved drastically, not because the sky is clearer, is because something fundamental happened that shook the market. So if similarly I've opened the position next to a fundamental change, I want to pay attention to the upcoming fundamental change to better prepare my myself to that. Okay, so of course we can analyze the position after it's opened and act accordingly. But like I said, if I'm using pending orders, all of those three will be activated automatically. It doesn't mean that I'm not it doesn't guarantee me any profits using the pending orders, but at least I know that I am secured in terms of the price that I designed, and if it goes against me, at least I have a stop loss and it doesn't carry on up, consuming more and more margin of my account. So this is what I think. Let's bring it down to where it's been. Okay, so the answer to the question here is when using pending orders in a strategy, we can automate our desired price to trigger to trigger an entry, stop loss, and take profit. We can have additional analysis even after the position is opened the position is opened. Okay, as we understand, then we can make better judgment if we want to keep it open or not. This is, I think, will suffice. Additional analysis and make better judgment what to do further. Also, as we spoke about a fundamental side when we trade on, let's suppose, on a Wednesday or anywhere near fundamental announcements, so we want to pay attention to that as well. And then if the market doesn't go as we plan, we can act accordingly. I don't want to specify, and we can carry on to the next judgment. Okay, but by the way, of course, if I'm enjoying watching the market and analyzing regardless my positions, I can always do it. But if it's necessary or not, I would say that it is. It's not necessary to analyze continuously what's happening with the market, because this doesn't give us anything. If I'll analyze in a minute or 5 minutes or 10 minutes, it's not going to change any of my decisions that I've made in here unless I know or expecting anything fundamental to happen. What is the next question is, what is a sub account and how to use it? So a sub account is very simple to make. All you got to do, just writing here the instructions, log in. Okay, so we'll explain here how to create a sub account, and then we'll elaborate what we can do with it. So what we can do is we can log in to avatrade.com. Second step is click on the 3 blue lines at the top left and click on accounts. And then click on add an account. Okay, so what exactly the sub account is used for? As we can see in here in the demo account, we've got $10,000. And underneath, we're gonna have account 1 to 3. In here, we'll have 4, 5, 6, and in here, we'll have another one, 7, 8, 9. Okay. So as we can see, the balance we currently have is $10,000, and let's suppose that on that account I want to trade Forex. On this account I want to trade commodities, and on this account I want to trade stocks. Now I can use all of those. I can use all of those. Maybe we'll have another one. We'll have another one just so we can convey the message here a bit better. So this account will be maybe like James Bond. It's going to be number 777. Okay, so or it's like this, right? Okay. Anyway, the point here, and this will be maybe cryptocurrencies. Okay, and the account balance is gonna be, let's say we're gonna split. In this case, we're gonna split. We'll have on each Okay, on each we'll have this much. Okay, now if I wouldn't divide it like this, and I would want to use the 10,000, I want to trade all of those in a single account. Let's suppose, okay? Let's suppose I want to trade forex, commodities, stocks, and cryptocurrencies. I want to trade everything on this account. Let's suppose. So we've already learned that there is something called margin impact. And there is also something that's called margin level. Okay, so as I wrote here, based on an occupied margin on the account, the level will differ. What does that mean? It means that if I want to open a position with platinum and another position with Apple, and another position with gold, and another position with a cryptocurrency, okay, or anything else, based on all of those positions that I took, my margin level will differ. Also, I need to maintain the margin level to a point that I can keep holding all the necessary, all the positions. Okay, what happens if I can't comply? And also, I would like to add that this margin level is based on the general leverage for the account. Now, if I can't maintain the necessary margin level, what will happen is, just a second, what will happen is, of course, the platform will start closing the positions from the biggest. So if I use all of this 10,000 for the all of what I wrote here, right? Forex, commodities, stocks, and cryptocurrencies. Okay, it makes sense for me to be tangled because the margin will all be mixed. Now, all of the margin will be mixed since I'm taking various positions with various instruments. What I can do else, I can, as you can see, I divided the 10,000 to separated accounts. This way, I've got one account with Forex, one account with commodities, one account with stocks and cryptocurrencies. This way, I can be more organized. And if I would want to deposit an additional funds to each of those accounts, I can do it separately. Furthermore, I can also move the money internally, which gives me the flexibility to defibrillate whatever account I want to maintain the necessary margin level. As we said, if we can't maintain the necessary level, then the platform will close the position from the biggest to free up more margin, up to the necessary level. So, as you saw, I've wrote down 3 steps, 3 easy steps to open a sub account, and this can allow you to be more organized working with your capital. Again, as I said previously, and I'm saying again, if something doesn't make sense or there are any questions, feel free to fire away. I'm also going to add the fact that if, for instance, I see that one of the accounts is performing better than the others, I might want to maybe shift the funds to where I think that it's necessary, that I think that is necessary. Okay, I don't want to carry on too much. I think this gives the general idea of how to use it and what to do with it. And I'm sure you guys can take it to the next level. There are lots and lots of other variations, but what I wrote here is just the most generic thing to convey the message here. Okay, so what I'm going to write here as the answer is a sub account is an account inside our main account which allows us to work with separated margin to as I've explained, maybe to a different. It doesn't, by the way, it doesn't mean that I have to do it like this. I can have Forex in here, and I can work with Forex in here and in here, and maybe in here to have stocks. Okay, but this is one of the ways that we can use a sub account more efficiently, okay, to divide and work with separated margin. Sub account inside a main account, which allows us to a separated margin, okay. It does not require to open a new account, and will be under the same email. If you need any further assistance with that, of course, you've got a senior account manager can show you how to do it within 10 seconds in your personal area. And that's basically the way that we can do it. And the last question we've got in here is, can I become a trader? It'd be like this, practicing on the demo only. Okay, well, the same way I can't become a pilot just doing the simulator. Okay, maybe I can, but I think the same way I won't be able to, because the demo doesn't give us the same feeling with as a real account in terms of decisions and psychology. So even if I crack the strategy and I have the general concept fully understood, still, and probably the decisions that I'll make on a real account will be different, since I'm not using a fake money like here. I'm using actual money, and the decisions that I take will affect the actual money that I've invested and the actual results that I have. So practicing on a demo is great, and it's great to simulate, but it doesn't give us the true feeling of trading. I would say though that if I would like to try something new that I haven't tested yet, and before I'm giving it a go with my actual money, it would make sense to simulate a little bit with the demo, but I don't want to do it for too long, because again, it doesn't mirror the way that I will trade on a real account in any way. Maybe just the technicalities, but then the psychological aspect of it. And this is why I think that the answer for this question will be no. Okay, no training on the demo can help understand the trading a bit better, but it doesn't have the real practice of trading with real money in terms of psychology and actual trading decisions. Okay, that's my personal opinion. Some people can tell me, Danny, I've been trading on the demo for 5 years and suddenly I am a I am a genius or whatever. But the natural way, at least to me, the natural way of things is maybe to try a little bit on the demo to get the idea, but at the end of the day, it's quite inevitable that we'll have to practice with real money properly. And as I always say, we gotta have some sort of a plan with guidelines that allow us to keep track on the progress. This way, if we make money, we know where we are and where we are heading, and we're not just dynamically playing around. And it helps us to maintain the progress. And that's what I think. But it's great to simulate new ideas. For instance, if I want to try now I do intraday and I want to try scalping or I want to try something else, using the demo can give me an idea before I do it with real money. Like I said, just the intro, but not something too crazy. All right, so we're gonna copy this and we're gonna paste it in our presentation. Furthermore, I wanna go to the third slide and share with you some links as I showed in the beginning. We're also gonna make this one smaller since I don't think it sits well in the presentation. Maybe now it looks a little bit better. We'll take this one higher. This one will have higher as well, and that looks great. Okay, yeah, so the links here that we have is also the education section. I'm also gonna send you these links through the chat. So the first link is to get you to the AvaTrade Education Center. This one is for the FEC and the Help Center. This one is for real accounts. So we spoke about a demo, but at the end of the day, we gotta practice with real money. And lastly, the Academy. The Academy is also something that I'm going to show you how to access from the website, although this link will lead to there as well. And before we also say goodbye, I'm also going to share with you the coupon with the special promotion code we've got in here, which is the Q&A benefit for you to enjoy one-on-one premium market review with your senior account manager. Now, if we spoke about a strategy and we spoke about a plan and we spoke about a demo, at the end of the day, a senior account manager is there to give you full support through the process, and he is also the go-to person to contact with all kind of questions related to trading. And having one-on-one premium market review with a senior account manager is just the most practical, at least in my opinion, most practical thing that I can give you today. So use the promotion code, give it to your senior account manager, and enjoy a one-on-one premium market review. I'm also going to show you a nice way how to access the tutorials in the Academy straight from the website as I promised. So this is very easy to do. We'll click on the arrow here. We'll click on clear drawing. We'll click on the arrow here to fold it down and click in here to go back to the default. So let's suppose that this is what you see, right? As soon as you log into the website and you get to the web trader, and the way that we can get to the Academy is found here at the bottom left, just above the button that leads to the chat. So as we can see here, we've got education. We're going to click here on Academy to get to the Academy right away. And as we can see, on top of that, we've got tutorials. Full click on tutorials right away. We've got this other window to open. And in here, we can see all kind of various topics. We've got the platform review. We've got the trading basics. We've got also stock market fundamentals. And on top of that, as I said before, our YouTube channel is equipped with a lot of educational materials for you guys to enjoy. So I recommend you guys to explore that as well. But until next time, unfortunately, we run out of time. So for today, I would like to thank everyone who joined us. I hope you could pick something practical to implement in your own strategy. So I wish you all best of luck, have a fruitful week, and have a good day.